Welcome to the Trading Lounge and the S&P 500 here on the 4-hour chart. There's no real change to any of the markets, so they're all unfolding as expected. So the S&P 500 on here, as you can see, is moving to the upside. It's just moving across the 1540 at the moment, but the 1550, 5 being the second strongest number in the market, will create a larger correction across that level there. So if we hone in on this chart a little bit here, we can see that the 1540 has created a bit of support here at the moment. You just got to be a little bit sort of careful here, because it does appear that, well, there could be 5 waves in this little structure to the downside here. If that's the case, then we'll have 3 up here meeting supply near the highs up here, and then have another little 5 waves down through here. So if you're currently long in this at the moment, well then having a stop under the 1540, so 1537 would be the right place. So if this market did have one more little move down through to here in 5 waves, the same length as this here, then look for support after that on top of the 1540, and then we'll be moving up from that point there. So yeah, look, the trend is up. It just really depends on what degree of structure that you're trading. If you're closing positions out before the end of the day, well, then you need to use the micro levels in here. Otherwise, you will just be still building a position to the long side up here, and so still further to go. Same with the Dow Jones as well. Expecting that to find support on the 14,300 here in due course, and then push up. The next level up is 14,500, but the 144 here may create a bit of of resistance there as well. I mean, it will as being just an even number, but I'm saying that from the point of view of 144. It's a big number with Gann, and it's a Fibonacci number as well. Anyway, we'll see there, but we still expect it to move higher above the 144, and looking at this structure moving up through here. So if we just sort of hone into that a little bit, let's look the 14,300 here, looking for got the little first high above the level through here. We're basically not chasing, but looking for basically up for wave 1 and back for wave 2 here, and then looking at this through here. Now, I put that wave 3 there because on the cash market it suits it much better there, but I can see on the on the futures market here as a CFD that this section here can be counted differently. But look, it doesn't really matter. What's going to occur across here is pretty much the trading levels classic pattern. We have the arrival, the reaction, the first high above the level here, and then we'll have the A, the B, and the C across here. But what you're looking for here is just to give it enough time here to to wiggle across here and then develop the support on the 14,300 here, because support on the 300, which is actually a minor level, the top of minor group 1, so 100, 200, and 300. So nice solid support on here would see us at the 500. Now, as you can see here, we may have this little sort of 4th wave here, 5th wave here, and then we may have another A, B, and C back into here, rechecking. So just always expect a larger correction than you think when you get to the number 3 as a group 1. It could be minor group 1, subgroup 1, or micro group 1. Always. So expect a good correction here, but the trend all in all is still to the upside, and so that's all good there. So the European markets are much the same as well. Well, the DAX is a little bit different than travelling a little bit different than the FTSE, but over the last week or so, it's sort of tuned in a little bit, and we're still looking at up for 1 here on the DAX, back for 2, and a 3rd wave up through here. But if you're trading up through here, you'd be looking at the 8,000 up here, because yes, it will push to 8.1. It'll push up and touch it and drop back and then push up and wiggle around a lot. But this is the third wave up through here, so you'd be looking at the fourth and the fifth through here, which will be very time consuming, and the overnight financing can be quite a cost if you're not aware of it. And most of the time you're not aware of the overnight financing, so same with stock. It's difficult to see as such. It's not sort of presented to you, but once calculated, it can build up quite significantly. The FTSE, still the DAX here. The FTSE here is much the same wave count as the S&P 500. So this pullback here, we can see a little 5-wave structure in here. So it's be a wave 4, looking for a wave 5 to the upside. The target has always been the medium level, the 6,500. So just hold long till you get to there. And the Australian market. We've been counting this little structure here to the upside from the 5,000 here. In terms of up for the 1, back for 2, 3, 4, and then we're looking at this little 5-wave structure here for wave 5, and this appears that we've got a little A, B, and C here. Keep the stops under the 510 here at 507 or something. Because if it does come back down through here, then we're going to have a larger correction through here. As always, though, support on the 5130 here, which would be the top of group 1, but a subgroup 1, so 10, 20, and 30. Support on here would see us up to the midpoint here as well. The other point here is that this trend that we're looking at here is basically expanding, isn't it? Because these corrections are quite small in here. This one's bigger. This correction here is bigger. This trend in here of 5 waves is bigger than this 5 waves in here. This 5 waves is bigger than this 5 waves in here. So we do have we have a pattern that's expanding to the upside. So just bear that in mind, and continue to build a position. The 61.8 retracement level of the big bear market is still around the 5,400 mark, but as traders, we just trade support and resistance, and use the Elliott as to help us with the direction. But having the direction is one thing. Working a trade from a particular price point is another, and that's why we use the price, we use the trading levels as support and resistance. Right, let's have a look at the commodities, as the US dollar is pushing higher, which obviously places pressure on the Australian market in terms of resources-based metals, because they're traded in US dollars. So let's have a look at those. This is the US dollar here, just on a 2-hour chart. We'll look at this in more detail on the FX side of things, but look, 82 here, minor trading level, was resistance, now support. So we can expect higher moves up through here. It will navigate through the 82.50 and then up to the 82.72 here, and have problems here, and eventually move up. So a move up through here places pressure on the commodities. So the copper market here, we know that excuse me, in one way or another, whichever way you look at it, this move through here is a corrective move. Now, when you've got corrective moves like this through here, they can get wider. So this little A, B, C here can just become the A wave, and we can have a B wave here, and we can have a C wave back up through here. Or if we develop, this is so far down for 1, back for 2, and it seems to be quite a nice little third wave unfolding through here. So a failed retest of the 350 here and a move down below here would create the impulse wave down, and then we could see a breaking of new lows through here as well. US BHP, let's have a quick look at that. That's the here we go. So it's closed up stronger in the on the close here, but still testing the 72 as lows down through here. We don't really have a setup in here yet for that. So, but look, this whichever way you look at it, the the copper market here is quite central to base metals, so we know that's corrective here. So eventually, whatever happens here, eventually this will move lower through here and be placing pressure on the base metals. So there's no real sort of low in here just yet to justify going in and buying base metals as such. Sure, there can be a short-term sort of rally, but not as a trend just yet. And that's probably quite evident in the gold market as well. In the gold market here, we can still see that this is a 4-hour chart here. We're still expecting it to come lower. This particular pattern in through here is just getting larger. It's traveling sideways through here, but it is corrective, and yes, it can push up here further and so forth, but it should break to the downside. So the safest trade, as always, is using the 72. The 1572 in this case has retested resistance to the downside, but you may see a little way in above here as well. But the idea is to continue to add to short positions in the gold market. Let's have a look at FX. Okay, with the US dollar here, it's just a 15-minute chart. We've been watching it come down and retest 82 as support, and now we're seeing it move to the upside. And this particular move from here, we've got little 5 waves here for 1 and back for 2, and then you can count 5 up through here as well. The 1, the 2, the 3, the 4, and the 5. So little wave 4 occurring across the midpoint here. So we can expect a sort of a larger correction here, I guess, and then a move up. The resistance up here obviously is the next group, which is group 2, but the 72 here is should have a bit of a whack here because it's got the 8272, so basically the 272, as I mentioned before, the 772 and 272 for some reason seem to have a stronger a stronger sort of stickiness, so we'll create this as a target to the upside here. But look, any move up through here once the market's finished doing all the buying and selling and whatnot at the 50 here, 5 being the second strongest number. That's why you just expect that to occur there. Yeah, then a push up through here. So as that pushes up through here, we're going to see the euro push to the downside. This will obviously place pressure on stock as well, but not so much on the indices, because that they are pushing up. And the other thing too is that if we look at the bonds market, oops, daisy. If we look at the these are treasury notes here. The treasury notes, bills, and bonds are all pretty much the same, just different time periods, such. But look, normally the bonds would be moving with the US dollar, but they're not at the moment. You can see this moving down here on the hourly chart. But this is good for stock, though. So bonds coming down, the stock market going up. So there is a bit, so they're not quite sort of correlated at the moment, but everything's going fine and everything's sort of on track here. So as this pushes up through here, if we take a look at the euro, we'll see that heading to the downside. So we're still looking. Look, there is on the 4-hour chart here. There's different ways to count this to the downside here. But the main point is that we're just seeing impulse waves to the downside, and we're seeing, corrective waves to the upside here, and this is another corrective wave here. So we'll see further downside through here. We were looking at this breaking through this this trend line through here last night, and that's occurred. So if we just drill in there a little bit on the 30-minute chart now. So we were looking at this particular pattern through here. And this ABC here is the same as the gold pattern as well. So we can pretty much count this as down for 1 and back for 2 and down for 3 now. But just before I do that, it's also important to understand that the 130 here it's a 3 number, so it's part of group 1. So this would be minor group 1, so it is important here because it's sinking down into group 1 down through here. So Yeah. The other thing that I just want to point out here too is that because this move down through here is not a real clean five-wave structure as such, it's actually be counted in three waves here. So we also have to consider this here as this little A, B, and C here. That's fine, but this can also be labeled now as a larger A wave, and then we have this as a B wave here, an A and a B and a C here. This would obviously be labelled in term, if it was an impulse wave coming down, it would be down for one, an A and a B and a C here for wave two, and the third wave unfolding to the downside. So that's fine. But just got to kind of keep bear things in mind a little bit. So this little A, B, and C here for the A wave, this here for the A, B, and C for the B wave here, and then a C wave coming to the upside. So we'll just be a bit mindful of that. So tracking this five-wave structure down through here, which we'll do next, is what we need to do. So yeah, but apart from that, this is a corrective pattern here, and this low will be taken out, so we will see this market move further to the downside. So yeah, building in short positions here at the moment would be the go, because this here, from this little high here, you can see that we've got down for one, back for two, down for three, four, and five here. So this is like a little third wave here. So this will be a little fourth wave here, sort of banging its sort of head against resistance, the 130 and this little area here, but eventually sort of roll over through here. But this little group 2 is going to give it a hard time as well, because you know that you know, in all trends and all corrections, there's a beginning, there's a middle, and an end. So this is the beginning here, and this is the middle that's the middle right here. So then we'll be looking at the ending structure through here. So we'll see some sort of moves down through here, and then we're going to see a retest back again and down again as well. So if you're building a position to the downside, maybe just do position sizing that's like, say, 1/3 or half or something, and just buy, or rather sell at different levels through here, and as it moves against you, then you can unwind each position singularly as well. So you're always at break-even point. So you're basically adding positions to the winning trades and withdrawing from the losing trades, you know, and always sort of moving with the bends in the river that way. And it's one way of working the trade. But yeah, look, as I mentioned, this is moving lower. The Australian market is pretty much on track of what we expected here. So we were looking for the move up for the A wave here, and now we're looking for the B wave to come back, and then the C wave to the upside through here. So look, a B wave normally pulls back 50-60% of the length of the wave A here. So we'd be looking at the 50-60 back in here. So the 102 is important. So let's just have a little look at that. And the B wave is normally in three waves as well. We've got three waves so far, but it's just a little bit small in comparison to this move here, isn't it? So that little move there doesn't really justify a B wave as such. So it'd just be the first leg. And the other thing too with corrections is that it's just sort of a guideline of alternation, which you find in nature anyway, is that one leg would be simple, the next one would be complex, and the next one would be simple or more complex. So when we're just sort of having a look at that to the inside here a little bit more, we've got our A wave up through here, and we're looking at our B wave. We know our 50% retracement level is at 102, so we can kind of expect that to come down there. So we do have this first move down, this first swing here, so it is in three waves already, but this is likely to be a little third wave in here with a fourth wave consolidation at this this area here is the support here, the 102.20 and 102.30, because that's where all the volume was turned over. So that's where the main is going to mirror that over here. So let's just see if this is a little five wave structure here, then we'll get 5, 3, and 5 here, okay, for the B wave, and then we'll see the C wave to the upside through here. So just be a little bit careful with this market at the moment here, because even if you do trade this short here, you're coming into 102.10 20 and 30, and there's going to be orders sitting at all those numbers, so they're going to just keep bouncing off each other there. So yeah, just be a bit mindful about that. Okay, so that's just about it. The robo trades that we've got on are long trades at the moment, and that's in line with the indices pushing higher. We're a bit selective about what we're looking at to be long. We're kind of steering away from the mining sector and looking at the other sectors there as well. Also, as well, if you're not trading the robo trades, or you find it a bit complicated, or you're a bit time poor, then we've been having some success with Halifax, who have been trading on behalf of our members, and it's quite good really, because they basically send you a text message in the morning if you would like to take those robo trades, and if you do, you just text them back, and then they fully manage them right through from the beginning, middle and end. And of course you can also go into your account and have a look at that there. To do the robo trade, you really do need about 25,000, 20,000 at a real minimum, because we're risking 1% per trade. We get a sort of an average of 6 or 7 trades right out of the 10. So to get the numbers working, you do need that that 20,000. Of course, 30 and 50 would be better for better results. But anyway, that's where the numbers start to hum along nicely. Alrighty, well, that's it. Thursday it's got a bit, in a bull market, it's got a bit of a habit of opening higher and trading lower through the day. If that is the case, and the market does trade lower through the day, then we'll be looking for that move down to be traded on lower volume. And if it is on lower volume, then we can look for Friday and next Monday to be on the long side, and then profit taking on the Tuesday and V-shape Wednesday, and so forth. So let's just see how we go. But if we're up today, then that's even better still. So, alrighty, I think that's it. There's a lot of announcements coming out today and tomorrow across the globe, so keep an eye on them. There's not a lot of companies reporting today with dividends and so forth, but tomorrow there's a handful, so just keep an eye on those as well. Alrighty, well, good morning and good luck.